Guys, I really do try to deliver, and it's been the fifth take. And I don't plan this. This is off the rip. This is not something where I have a piece of paper or I have a script next to me that I'm reading off. Like, guys, I really do this off the fly. I really do this off the fly when it comes down to putting out recordings on YouTube. And this is my fifth take, guys. I think it's my fifth take for the fact that every single time I'm talking, because I'm not touching the phone, my phone would lock. And because my phone would lock, it would end the screen recording. Because, guys, that's exactly how I'm delivering this message to you guys. I'm screen recording trading view. And as I analyze them, I mean, the markets is already analyzed. It's more the sense of as I walk you guys through what has already happened and what I believe is most probable to happen in the future. When I'm not touching the screens and my phone locks, it ends the recording. I'm really, really happy. I'm really sad about that. I'm really happy about that. I'm really sad about that because there was a lot of golden nuggets that I mentioned that, I'll be honest with you, I fucking forgot already. I forgot already, man. So what we're going to do today is we're going to have a look at the daily time frame and the daily time frame only, focusing on ES, and then we're going to move on to NQ, and then we're going to round off with YM. We're going to round off with YM. The reason for doing so is because all three stock index markets work in a very similar function, and we'll see just why very shortly. We're going to start off with ESE. So this is the S&P 500. It's the futures contract of the S&P 500. So when having a look at this, the first thing to obviously note is the range-bound trading that has been going on for the couple of days now. Since pretty much the middle of August, we've seen range-bound trading, right? This is something obvious, but what is even more obvious, guys, is the dealing range highs from 5,722 down to the dealing range low. So this is a macro dealing range because it spans over at least 1 month. You've got a dealing range at 5,120. Now that range there, if you was to slap a Fibonacci tool on it, just to map out the 50% region, which would be the equilibrium of the dealing range, where you'd expect price to at least retrace back up into to gauge how strong the market is to the downside or to the upside. What we've seen is, and I'm eyeballing it right here, what we've seen is equilibrium over there being met and broken. We've got 8 consecutive up close candles stopping there that took out the short-term highs, right? This short-term high was a very important high to take out. And the reason why I say so is because, let's zoom out for a moment. Not too much, actually. If we zoom out, we can see that the prior macro sell-side liquidity that was in question was 5,267 and 3/4. That's correct. So this was the final high that was created before we saw the lows being taken clean out. That was the final high. So that short-term high there is hot. There's a lot of traders who were long in this area who got wiped out at this area who still remember these highs. So this high is of very, very high importance. So once we've got this drop in price, the idea would be to look for the equilibrium, so the 50% point between the highs and the lows, which eyeballing it, I've been doing this for quite some time, it's because it's around this area. We've also got a volume imbalance between the 1st of August and the 2nd of August. We've got a nice little volume imbalance, which price just absolutely disregarded. I mean, to the downside, minor manipulation to the downside, I guess, but we completely disregarded, right? And ever since then, this is where we are at now. Now, last week, the analysis for last week was, especially because we were right there, right? This was the last candle that I saw before I made my analysis. I expected a continuation to the upside, not only attacking the 5664 region, but also a push up into this last up close candle area, which is the lows and the opens of the last up close candle. It also coincides with a volume imbalance as well. Quite a few. There's actually a new week opening gap and a volume imbalance. So this area, this whole area here is of interest, a lot of interest as well. And although we have a fair value gap there, which price did get up to. I'll be honest with you guys, I wasn't satisfied with that only being met. That's the reason why I was saying that not only are we going to get a break above the lowest displacement for that sell-sided balance, buy-sided inefficiency, we're also going to get a run up into the last up-close candle, which would be considered the order block for this dealing range highs to the lows. But we failed to deliver. What we did get instead was the Monday, which buy stocks was taken, intraday buy stocks was taken, but obviously we got a candle body closure inside of the previous daily range. The Tuesday came by, gapped open, rallied to the upside. We failed to even close above the open of the prior day, which was the Monday, the beginning of the week. We sold off. We did sweep sell stops and minor manipulation to the upside, and we sold off and we took stock to the downside. We closed below the lows and we wicked down into the very important volume imbalance. Now, this is important because this low, which is at 5582 and 3/4, pretty much holds the bullish structure. If we see continued upside movement, of course it's okay to see a retracement. This retracement is okay because candle bodies, they tell us the story. It's the wicks that cause the damage. And what we've seen is the candle body causing damage, taking out sell side, and creating a shift in market structure. And then the following day, what we see is a massive gap. There's a massive gap there. That's a new day opening gap. Because we closed there, we closed 561025, and then we open at 580. 580. So over 30 handle, that's a 30 handle new day opening gap that we've created. Now with this Monday, right, I'm expecting a continuation to the upside, attacking this area right here. But going into the meat and potatoes of this week, because there's going to be a lot of high impact news. I believe Friday, Thursday, Wednesday are going to be the highest impact news days, with Monday being pretty much nothing. I think there's only I think there's one gold candle, gold folder. So I think the one gold folder potentially could manipulate the rest of the week. There's a good, strong potential for that to happen. So I'm looking out for Monday to sell off at least into this gap here, and then Tuesday, Wednesday, Thursday, Friday run up into all-time highs. But with the liquidity that's coming into the market, anything, guys, could happen. Anything could happen, guys. I am still looking out for the highs to be taken, so I'm looking out for 5669 to be taken out, and I'm looking out for the last up close candle area, that region, to be booked. And the reason why I say so is because daily stops to the downside. In this case, sell side liquidity has already been taken. So if sell side liquidity has been taken, what about buy stops? We've got relative equal highs around this area, right? We've also got a fair value gap. We've got a sell side imbalance, buy side inefficiency. We've got stops above this area here because that's all time highs. Now, if you were to compare that to, because as I said before, guys, we're going to be looking at ES, NQ, and YM together. Right now, if you were to compare these charts together, we can see the similarities and the differences in how price action has been booked. Because if we study the dealing range highs that was created and booked on the 11th of July to the lows that was created and booked on the 5th of August, and have a look at previous sell side liquidity, which is there, which was booked on the 31st of May, very similar to ES, we can see how price has delivered to the upside back up into equilibrium in comparison to ES. And what we can see is, very similar to ES. We've got short-term high there, and we've got roughly equilibrium is roughly around there. So there is a gap between Wednesday and, so the 31st of July to the 1st of August open. There is a little gap there, and that is roughly where equilibrium lies, right? In fact, because it is a very close one and it's not obvious, I will be using a Fibonacci tool to test this out. I'm also going to be deleting this afterwards, just to eye out what's going on here. So as you can see, right, just by quickly plotting it on the chart, you can see that the price actually sold off directly into a discounted region before pulling back up and continuing to trade in a premium. So it sold off into a discount. Anything below 19,171 is considered a discount price. Now, on the day of Thursday, the 29th, which was a couple of days ago, we sold off into a discount, but we didn't even close in a discount. We spiked into a discount, but we closed inside of the buy-side imbalance, sell-side inefficiency, whilst rallying up, now looking to attack relative equal highs. I'm going to delete this. So now that we know that price is in a premium, very similar to ES and definitely YM, is expected for these all-time, I don't know why I keep saying all-time highs, is expected for these relative equal highs to be broken, right? Because very similar to ES, after short-term highs was booked, we retraced, and after a lengthy draw up into buy-side liquidity, of course, selling off, having a small retracement is okay. It's part of a standard market. So if you're going to expect some form of a sell-off, where would you want to sell it? Where would you want to buy from? Well, this buy-side imbalance, sell-side inefficiency seems like a decent area. Why? Well, this is the only gap that is formed just after buy stops was taken. So if price was to retrace back into that area, that would be the first point of interest to look at. Now, what we saw is a sell-off into that area, a nice gap, just like ES. Friday, we come up and we failed to take out relative equal highs. Very similar to ES in the sense where you've got relative equal highs and we've got the order block and we've got the volume imbalance, you've got a new weak opening gap, we've got so much things going, the sell side imbalance, buy side inefficiency. With this, we've got relative equal highs. We've also got a volume imbalance that was, I would say, has been delivered to. Business has been taken care of at that area, but we also got a higher time frame. Obviously, this is on the daily time frame, but we've got the 3 down close candles before we saw the upwards move taken out by stops. That is also considered as a bullish order block. Oh, it's obviously going to be reverted, isn't it? Because it's an order block that was respected to the whilst price was going down. So as you can see here, you have the last up close candle. It just so happens to spike the order block, and then we sell off. Short-term high, and then we continue to sell off. We rally, breach the highs. We run up into this order block, and then we sell off. So this order block at 20,014 and 3/4 is of importance. And going into this week is something that I'll be looking out for. If you have a look at YM, just had a look at NQ. If you have a look at YM, which is no, not that one, sir. We are now having a look at YM30, which is the Dow Jones. Having a look at Dow Jones, we can clearly see that all-time highs has been poached, has been booked. For me personally, I don't see no new news coming into the markets causing Dow Jones to be booking all-time highs. Bearing in mind that Dow Jones at this point in time is front running the markets. Dow Jones comes first, ES comes second, and NQ comes third. Now, with YM now, what we can see is very similar price action, but different at the same time. Now, you need to remember that the Dow Jones only holds 30 stocks in its index. And this is the reason why trading in comparison to NQ and YM is NQ and ES is a bit different. Because if you were to take this dealing range highs to lows, and we've got the short-term highs there, price is broke, not only the short-term highs, but it's also created an all-time high level, which was printed on a Thursday. If you go back in time and have a look at the lows, you can confirm that all 3 indexes, ES, NQ, and YM, did take out their macro lows before pumping and taking out short-term highs. Right? Using the equilibrium from highs to lows is like there, and we breached that a long time ago. So the mere fact that NQ only just reached its discount prices whilst Dow Jones has booked all-time highs, shows that Dow Jones is front running the market. So if you were to look out for any dramatic or big movement to happen, whether that's to the upside or to the downside, Dow Jones would be the first point of interest. Dow Jones would be the place where I'd want to check in and see what is happening. So what I've already done is I've set alerts at all-time highs, and I'm also going to set an alert where the last down close candle is, because what I'd want to see if I'm looking to buy ES, and I keep calling YM ES when looking to buy YM, which I don't trade YM, guys. Just for you guys to know, I only trade NQ and ES. All right, but if I were to trade it, I'd want to see price retrace back down into the last down close candle, and I'd have to put my stop down there because these stops could be swept on. These stops could be treated as food, and I ain't food. I'm not food at all. So I'm gonna leave you guys with this, and I'll keep you guys updated if anything changes.